Hello guys and welcome from Andrea Nebbiolo.
But before we start, however, if you haven't already done yet, I invite you to subscribe to our channel, so activate the bell so that you are always up to date when new content is released.
In several times we have spoken about the difficulties in going short on the mini SP, and in fact I said many times that usually on those kind of underlyings, so on underlyings that have very strong buy and hold in a certain direction, and for example for what regards the US stock indices and futures, it's extremely difficult to go short because they have a very strong and impressive long bias, so the long buy and hold in this sense. I had the needs in the past to have a sort of cover from the other approaches, so from being long most of the times on those underlyings. And I found something interesting I want to show you and I want to share with you guys. So in few words, this strategy is a strategy that I had coded in 2017 on the mini S&P, and it's an intraday strategy, and basically it works finding two levels during the daily session of the mini SP, and the aim is to go short when this level down here is crossed, so in the following bar after the cross of this level, and eventually you can go long over the other one. I just trade the short side for this strategy because I just want to cover the long that I have from other positions, but it's also possible to work on the long side even if it's not the best approach, because this kind of underlying usually prefers the reversal approach. But anyway, this kind of strategy works taking the open of the session, the opening price of the session, and then you can get those levels adding and subtracting the average true range multiplied for a certain number of times, and you are able then to optimize which is the optimal value as number of times. So basically, once this red level is violated, at the next bar we enter short, and we will keep the position up to the end of the trading session or when the target or the stop loss is reached. So this approach can be interesting, as said, mostly for covering other long positions, because maybe you are long with different reversal strategies, and this one may help you when the market is falling strongly. So you don't have to think that this strategy should earn quite often or consistently, just because it's against the nature of the mini SP in general. But let's see how it goes. We can see just from the equity that it had some very nice periods, like the 28 when the market used to fall consistently. Then after, the strategy was quite acceptable, and then here it was sideways, and it's doing the worst drawdown in the very last part, as we can see also here. But in general, the average trade is quite acceptable for being an intraday strategy. And if we have a look also to the annual period analysis, here we can see that in the worst year for the markets, among the most recent decades, it has been a quite good year here, and in general it didn't create any problem in the other years, apart from the 2016 and 2021. So in general, it's a quite acceptable strategy. As I said before, it should be thought as a coverage, so it mustn't be used. It mustn't be used as the main strategy or the core strategy for the Mini-SP, but it can save you in some market context or to cover other long positions.
I invite you to like and share this video if you liked it, and I also remind you that at the link below in the description you can find a webinar free, and you will find in this webinar an introduction to the construction of trading systems and the creation of well-diversified portfolios of automated strategies following the method of the 4 times world champion trading Andrea Unger. So finally, I remind you that if you haven't yet subscribed to the channel, I will make an appointment for the next video to discover together other aspects related to the world of the trading systems. Goodbye, guys!